Hi, this is Jay and welcome to Headways 360. Today we will try to understand what is mutual fund and what makes it stand out among other investment options. Whenever we earn some income, we tend to keep some portion of it in savings account or max book it under fixed deposits to be used in future. In many cases, our savings gets accumulated in the account and we do not allow our savings to grow based on our requirements. Funds lying in the savings account loses its value. Inflation is rising day by day, and according to the International Monetary Fund's forecast, the consumer price index will grow to 4.1% in the year 2020 from an average 3.4% of 2019, and it is going to sustain above 4% for the next 4 to 5 years. Any return on investment is placed on the below principles which is interconnected, that is, risk, return, and time. The higher the risk, the higher the return. The longer the time invested, it can lead to higher returns. Although this holds good most of the time, but we cannot mitigate the fact that a wrong or risky investment will always be prone to loss as well. In our country, people mostly save in four forms: savings account, fixed deposits, gold, and real estate. As we discussed earlier, every investment is interconnected with risk, return, and time. Ideally, if our inflation rate is 4%, then we need to ensure that our investment is fetching us more return than the rate of inflation. Savings account has no time restriction, no risk, and it's highly flexible as one can anytime deposit or withdraw the money. The only drawback is the less return, which is hardly at 4%. Fixed deposit is also risk free and guarantees fixed return as it is time bound. The returns are slightly higher, wherein we can get a rate of return of 5 to 7%. Gold rate always fluctuates and has a moderate risk attached to it. Recently, we can see the rise in price of gold due to the geopolitical tensions, wherein India has also increased the import duty on gold, which is also one of the reasons of its price rise. Ignoring the current situation, gold price had not been that attractive in the last 10 years as the returns were moderate. At the same time, we cannot deny the fact that gold has given us good return in India in the last 50 years as the investment of 10 gram of 24 karat gold, which was costing approximately 184 rupees in 1970, has now increased to approximately 47,500. Real estate investment is not that lucrative nowadays as it was earlier. Although the risk is moderate, but the disadvantage is that it requires huge investment. People owning land or commercial property still enjoys good return, but purchase of flats as an investment purpose is not that attractive as the value depreciates over a period of time. Some people seeking fast and high returns try to make their fortune through stock market, but the limited knowledge or study which at many times lead to loss of investment. Although returns can be high, but if you do not have a close watch on market and your investments are not right, your investment can even vanish. Since investments are subject to market risk, it's always better to diversify your investment. This is where investment in mutual funds comes into picture. Mutual fund helps us to diversify our investments based on our risk appetite. It is an investment that uses money from investors to invest in stocks, bonds, or any other investments. It gives us a lot of varieties as we can invest in companies, stock, gold, real estate, agriculture, metal, specific sectors, bonds, and so on as per our choice. And it also helps in getting a good return over a period of time. Now let's understand what is an asset management company, its role, functions, and the type of funds. An asset management company or AMC invests pooled funds from different clients into a variety of securities and assets. A fund house decides when, where, and how to invest this money. These companies appoint experts called portfolio or fund managers who manages these funds pooled from different customers. When we invest in mutual fund, we buy units of that fund. The price at which we buy that unit is called net asset value or commonly called NAV. The mutual fund companies make money by charging a percentage on the fund or asset invested by each customer. These charges are commonly called entry or exit loads in the mutual fund context, which varies from 1% to 2%. When it comes to investing in mutual funds, you have two options. You can either invest a lump sum amount as a one shot payment or go for a smaller investments at a regular interval, which is popularly known as systematic investment plan. Mutual fund comes with a definite financial aim that helps you to decide on investment. An AMC will have a team of researchers and analysts who report their market findings and trends to the fund managers. Based on these findings and investment objectives, decision is taken on which securities to buy, sell, or whether to hold them. It must also send regular updates to investors on sales, purchases, NAV, portfolio, or other essential details. There are trustees of mutual fund who keep monitoring the AMC's activity to ensure investments are protected. There are approximately 44 asset management companies operational in India with a gamut of more than 2,500 mutual fund schemes. Mutual funds are broadly classified into three types: equity mutual fund, debt fund, and hybrid fund. I would like to just briefly introduce the types of mutual fund in this video, as otherwise the video will be very long. An equity fund is a fund wherein investments are done primarily in company stock which are actively managed. On the other hand, debt funds are mutual funds that invest in fixed income securities like bonds and treasury bills. Hybrid fund, as the name suggests, are mutual funds which invest in both equity and debt funds to achieve the perfect mix or combination to yield better returns. Now let's understand how do mutual fund works. As we know that mutual funds are a basket of many financial instruments in the form of units called net asset value or NAV that generate returns over a period of time. The fund managers invest the collected funds in various financial instruments in order to generate returns for the fund holders. The total capital gains from these allocations gets added to the assets under management of that fund on which the NAV of the fund depends. And part of these gains get reflected on the units which change accordingly, which when multiplied by the number of units available gives a clarity to investors on the profit or loss what they make out of their investments from mutual fund. So why mutual fund, or what are the advantages which makes it one of the best investments? Let's understand. Mutual fund gives us the variety from investment in company stock to gold, real estate, debt instruments, and so on. It gives enough choice based on our likings and requirements. The best part is that it helps us to diversify and helps to invest in small units as well. For example, if somebody wants to invest in a single stock, say MRF, Nestle, Shree Cements, Page Industries, Eicher Motors, Bosch, and so on, it may cost 10,000 to 30,000 and in some cases even more for a single stock. But when we invest in mutual fund, which is a mixture of different companies, we get the benefit of investing with a lower amount as small as 500 rupees. If somebody is looking for investment in mutual fund and also get the tax benefit, then the ELSS fund will help you here, as you get the tax exemption under ATC of the Income Tax Act for the deduction up to 1.5 lakhs. But here the only hitch is that the fund will be locked for a period of 3 years. Mutual funds are well regulated and very transparent. And if invested for a long term, it can also help us with a good return. At the same time, it's very cost effective. The sales charges are very minimal. As I told earlier, this is very affordable as anybody can start the investment with mere 500 rupees. And the last but not the least, it is handled by specialized fund managers so you need not have to worry for analysis and frequently checking the market. Finally, before investing in mutual funds, as it offers plethora of opportunities for wealth creation, it's imperative that we should be clear with few things, as we need to know the financial objective for which we want to invest. Is it for short term or long term? Is it for building corpus or for child's marriage or child education and so on? After contemplating on your financial goals, you need to check on the fund performance and select the top performing fund in that category. We should always look at the asset under management. The higher the value of the total asset under management for a fund, higher are the chances that the fund will deliver substantial returns in long run. We also need to check on our risk tolerance, which will help us to decide to completely go for equity or debt fund or a combination, which will help us in achieving our goal. Although this is a vast subject, hope this video has helped to cover the topic in brief and try to help in the basic understanding of mutual fund. Thanks for watching. Signing off now. Stay connected, stay blessed.